Hello everyone and welcome to Accounting with Yana. Today we will talk about the chart of accounts in QuickBooks Online. We will cover what it is, how to set it up the right way, and the best practices that accountants use to keep the books clean and organized. The chart of accounts is a list of all financial accounts in a company's general ledger. Think of it as a backbone of the entire accounting system. Every transaction in QuickBooks flows through one of the accounts. QuickBooks organizes the chart of accounts into 6 main account types. Let us go through each one. Assets are what the company owns, such as cash, accounts receivable, and equipment. Liabilities are what the company owes, such as accounts payable and loans payable. Equity is the owner's share in the business. Income is the account type in QuickBooks that records money earned from sales and services. In financial accounting, we call it revenue. Please note that QuickBooks labels this category as income, so don't confuse it with net income, which is what remains after all expenses are paid. Cost of goods sold covers the direct costs of producing the goods, such as raw materials or merchandise purchased for resale. It may also include direct service costs. Please note that QuickBooks treats cost of goods sold as a separate account type. It is not the same as expenses. Keeping these two categories separate allows QuickBooks to correctly calculate gross profit on the income statement. Expenses are the costs paid to run the business, such as rent, utilities, and advertising. These are the company's operating expenses. If the chart of accounts is not set up correctly, the financial reports will not make sense. That is why clean setup is so important. I have a video explaining what can go wrong if the chart of accounts is not properly designed. I'm posting the link here and in the description below. Now let's look at how to set up the chart of accounts in QuickBooks Online. For this demonstration, I am using QuickBooks Accountant Online. Step 1. Log into QuickBooks. Go to Settings, top right, then click on Chart of Accounts. Alternatively, you can go to Transactions in the left side menu and select Chart of Accounts. You will see a list of all existing accounts. Step 2. To add a new account, click the New Account button in the top right corner. A form will appear. We will add a new account called Deferred Revenue. If you are not familiar with deferred revenue, watch my video. I am posting the link here and in the description below. First, type the account name Deferred Revenue. Choose the account type Other Current Liabilities. Then choose the detail type Deferred Revenue. Step 3. Enable account numbers. This is a step that many people skip, but it makes the chart of accounts much easier to read. To enable account numbers, go to Settings, then Company Settings or Accounts and Settings, then click on the Advanced tab. Under Chart of Accounts, click the Edit and turn on Enable Account Numbers. Once you do this, you can assign a number to each account. A standard numbering system looks like this: 1000 to 1999 for assets, 2000 to 2999 for liabilities, and 3000 to 3999 for equity, 4000 to 4999 for income, 5000 to 5999 for cost of goods sold, 6,000 to 6,999 for expenses. This system makes it very easy to find any account at a glance. Notice that each account type has its own number range. This reflects exactly how QuickBooks structures the income statement, from revenue at the top all the way down to expenses at the bottom, and the balance sheet, assets, liabilities, and owner's equity. Now, let us talk about best practices. First, use subaccounts for more detail. For example, under the parent account, Utilities, you can create subaccounts for electricity, internet, and water. This keeps the financial reports clean while still giving you the details you need. Second, don't create too many accounts. If two accounts always show the same type of transactions, consider combining them into one. Third, use consistent naming conventions across accounts. Avoid adding the word expense to account names since the account type already defines it. For example, use rent, utilities, and insurance instead of rent expense, utilities expense, and insurance expense. Please note, once you start using an account in transactions, you cannot delete it. You can only make it inactive. So, it is always better to plan the chart of accounts carefully before you start recording transactions. Did you know that you can get free access to QuickBooks Accountant Online? This gives you a live environment to practice setting up a chart of accounts and working with real transactions at no cost. You can also get access to the QuickBooks Pro Advisor program, which includes a free QuickBooks training and certification. I will be recording a video shortly on exactly how to get this free access. Stay tuned for that. Let us do a quick recap. The chart of accounts is the master list of all accounts in QuickBooks. It has 6 main account types. Assets, liabilities, and equity appear on the balance sheet. Income, cost of goods sold, and expenses make up the core of the income statement and calculate gross profit and operating income. We set up the chart of accounts by adding accounts with the correct account type and detail type. We also enabled account numbers to keep everything organized. We also reviewed best practices using subaccounts, keeping the list short, and naming accounts consistently. If you would like to learn more about financial accounting, I have many videos on this topic on my channel. I am posting the link in the comments below, and you will also find it in the video description. If you have any questions about QuickBooks or financial accounting, feel free to post them in the comments below. I hope you found this video helpful. Please make sure to subscribe, hit the like button, and ring the notification bell so you are notified when we release more videos like this. Thank you all so much for watching, and I hope to see you all again in the next video.